So Paul, if I can call you Paul.
You can certainly do that.
Let's talk here. How close are we to an economic disaster on the scale of the 1930s, do you think?
Wow. Nice way to start the evening. Okay. I mean, if you look at what has happened, there's an eerie similarity. I mean, now, a lot of it, it's 21st century versions. So we've had what are effectively enormous bank runs, but they're not mobs of people in the street. They're mobs of people clicking on their mouses on their computers. It's more abstract. It's more virtual than it was in the 30s. But we've had a financial collapse that's really quite spectacular. We've got, in some ways, a return of depression economics. Normal policy tools. The Federal Reserve has cut interest rates all the way to zero, and it's not enough. So we've got all of these things. Now, there are reasons to think that we're not going to have a second Great Depression, which mostly come down to the fact that we had a first one, and we think we learned something from that one. But it's closer. It's more like the Great Depression than anything I expected to see in my lifetime.
Now, some of the mistakes of the Great Depression we haven't repeated. I mean, the first time around they waited a long time before the government took significant action. At least we're trying to do something.
Yeah, that's right. So, we have the chairman of the Federal Reserve Board who was demoted from his previous position as chairman of the Princeton Economics Department. So Ben Bernanke is a scholar of the Great Depression, and there are known mistakes that people made in beginning of the Great Depression. So they didn't, they didn't cut interest rates. They actually raised them slightly initially before changing their minds. So we didn't do that. Instead, very aggressive. We didn't have Herbert Hoover cut spending and raise taxes because he thought you had to balance the budget in the face of this crisis. We're not doing that. I have to say and I should also say that we had a kind of a mini Great Depression in Japan in the 1990s, something that bore a family resemblance to that was a much milder case of the thing. And we thought, or a lot of people thought, that we have the answers. We're not going to make the mistakes that our grandfathers made. We're not going to make the mistakes the Japanese made. But if you actually look at the results of the treatment so far, they're a little on the disappointing side. It's not that I'm not saying run for the hills, but nothing has worked as well as Ben Bernanke thought it would work. I have to say things have not even worked as well as I thought they would work, and I was a relative pessimist. So not good. Boy, this may end after about 20 minutes, but everybody can. I'm sorry.
We're going to get back to the Great Depression in just a moment, but
right.
How about an upbeat question? Actually, just to leaven the atmosphere. Could you share with the audience, what did your mom say when you told her you won the Nobel Prize?
She's just saying, "Oh, that's wonderful, dear."
I heard she was quoted as saying, "It's about time," or something like that.
No, the best actually was my wife, who said after, "Oh my God," then after a brief pause, she said, "We don't have time for this," which was exactly right because there's this financial crisis out there. But anyway, and of course, my reaction when I actually got the call, which always comes, ungodly hour in the morning, was I think everybody's reaction, which was, which of my colleagues is faking a Swedish accent? And
so the economy is not recovering quite as quickly as you'd like. It hasn't responded as quickly to the medicine as perhaps you might have predicted. But you're still thinking this economy needs a strong dose of economic stimulus.
Yeah, I mean, first of all, there is nothing else, right? One of the dirty little secrets of presidential or of political economics is that through my lifetime, through your lifetime, actually presidents, Congress have not mattered as far as the economy is determined in the short run. Not much anyway. It's basically been the Federal Reserve. It's been the guys, bunch of technocrats deciding on interest rates have been in a position to do what's necessary. So when we had a severe slump in the 80s, Paul Volcker cut interest rates and took us out of it. When we had a slump at the beginning of this decade, Alan Greenspan, who is I'm not a fan, but he did cut interest rates and eventually got us out of it. And then the politicians get to say, "Oh, look at what great things we achieved." But now Ben Bernanke has cut interest rates to zero. and we're not out of it. And so all of a sudden, it is up to the president, it is up to Congress to devise a solution. So they've got to have this stimulus thing. We've got to have a, we really are back in the 30s. We need the new WPA because there isn't anything else, or if people don't know, I mean, you really want to read The Onion as your best news source.
That's where you get your news, the satirical newspaper.
And The Onion had the perfect headline a few months ago, which was, recession-plagued nation demands new bubble to invest in. And, if you can't find me that bubble, then we need the stimulus program.
I mean, because think about it. I mean, trade's not going to get us out of this right now. Look at the state of our trading partners.
Right.
Investment, you just said, not much to invest in at the moment. There's not a lot. Oh, consumer demand, not a lot of that either, right?
Right. I mean, everybody has suddenly sort of. We use this phrase in economics quite a lot. We talk about the Wile E. Coyote moment. For people who aren't familiar with the classics, in Roadrunner cartoons, it almost invariably Wile E. Coyote runs off the edge of a cliff, and he's able to go about 10 steps until he looks down and realizes there's nothing under him, and then, and we kind of had, for consumers, in particular, we've had the Wile E. Coyote moment. People were borrowing, they were running up debt. We had a savings rate of 0.4% just on the eve of the crisis. People were putting away 0.4% of their money and spending the other 99.6% because they figured, hey, the rising value of their house would take care of their retirement. And so all of that had to go. There was going to be a moment when people looked down, and so consumers are not spending. Businesses, we'd like to have business investment, but businesses are not going to invest when they see consumer demand falling away. And housing, less said about that, the better. And so and exports, right. I mean, the whole world is caught up in this thing. I mean, we think we've got it bad, but you should look at Ukraine, right? And so there is very little in the way of the private sector. There's hard to see where support comes from, let alone recovery, just support to keep us from plunging further. So it really is, again, it's up to the occupant to be of the White House and his counterparts abroad.
And the incoming occupant of the White House and his team seem to get it. They're pushing forward on a stimulus package. Just now time to sit back and wait for it to work its magic.
Yeah. No, look, the economic team came out with a report last weekend on what they think their package will achieve. And actually it was kind of eerie because their numbers, based on detailed knowledge of the plan, were very close to my back-of-the-envelope numbers. I had done a back-of-the-envelope calculation and sort of tried to figure out what it was going to do. And their numbers actually are very, really very, very close to what I thought. And it's not enough. Their own numbers say that this thing will shave 1.8 percentage points off the unemployment rate by the end of 2010, which means that it will reduce the unemployment rate from what it would otherwise have been, but they think that it'll actually mean that the unemployment rate will be as high 2 years from now as it is right now. So they themselves are not calling for a lot of progress from this thing. They're only calling for it providing some bottom to prevent things from getting much, much worse. And of course, there is, all of this is economic forecasting, which is not quite as respectable as witchcraft. So it's there's a real chance it could be worse than that. It's despite all of the talk. I mean, there is. All right, I know I want to cut Barack Obama some slack, but he's talking. Churchill defending the beaches on the economy, but he's actually proposing something that, although it's big by any normal standards, actually does not look adequate to the scale of the crisis we're now facing. And so I'm glad that they're talking in that direction at least. Could be much worse. Could. But I don't see it as being anywhere near the scale of the thing that we actually need.
But we're already talking about some breathtaking numbers.
That's
and the
right.
deficit next year is what, 1.2, 1.3 trillion or something like that?
Yeah.
And we're going to get the money to do it even bigger.
Yeah, well, okay. So we're a big advanced economy with a sophisticated population and stable, we think, government, more or less. And advanced countries, wealthy countries can borrow a lot of money as long as they have some credible, there's some reason to believe that they will pay it back when the time comes. So we had, at the end of World War II, we had a debt that was about 110% of GDP, which would right now be $16 trillion. And we actually have a debt of, moment here, but we have a debt that's actually more like $7 trillion right now. And so if you believe that we could borrow up to the level we were borrowing at the end of World War II, there's actually still a lot of running room. There are countries out there that are like us, rich, but have much higher levels of debt and don't have a problem. Japan has been able to borrow a lot more money. Even countries that are like us, rich, sophisticated, but don't actually have stable governments, like Belgium, have huge amounts of debt, right? Every time I despair about our political system, I take a look at some of these at Belgium and say, well, we could be Belgium. But anyway, or Italy, again, very large levels of debt. Although they are actually people are starting to demand some premium on Italian bonds. But the point is that as long as we have a reasonable prospect that we're going to do the right thing eventually, we could borrow a lot more money. That said, yeah, $1 trillion here, $1 trillion there, and soon you're talking about real money, right? It is. These are scary numbers, but there are things that are. There are no safe options here. I think that's the point. If you say, well, let's be conservative and not borrow, let's not do a big deal, let's creep up on the problem, let's do a little bit, half measures, then you are running the real risk that we are actually going to replay the 1930s, and we don't want to do that.
The bailout for banks, you think we needed to spend the money?
Yeah. I hated the fact that we have to do that. And the original plan was horrible. The original, we might say that the initial plan that came out of the Bush Treasury Department was that us, the taxpayers, that we were going to go out there and buy up toxic waste from the banks. And that was going to solve the problem. And of course, you knew that if we did that, we were going to buy stuff that was quite literally not worth the paper it was printed on. The plan as it evolved, more or less, was one in which the public bought shares in the banks and gave them more capital. And that is, that's what you always end up doing in financial crises. It's what FDR did in the 30s. It's what Sweden did in the early 90s. It's what Japan did finally. And it's what you have to do. Now, I don't like it, and I don't think that we got very good deals in the whole thing, but something had to be done. Again, there's a lot of stuff that you would say, let's think about this. Let's not. I'm really worried about misuse of taxpayers' money, but you have to take some risks and do some things you don't want to do when you're worried again about Great Depression too, which is that's the cloud that's hanging over everything. Is the real possibility that we could be down that road again, and we don't want to go there.
Are the stakes so high that we should move quickly on the other $300 billion?
Yeah, I mean,
even without the accountability that is not being provided.
We will. I do hear now. I do hear that they're working frantically on trying to get some accountability now. But yeah, they're going to need the remaining $350 billion and try to do it better. I mean, I have to admit that if we actually we're going to have the same management in place, I would be, even despite everything I've said, I'm not sure I want to give them the extra $350 billion, but we do have new people coming in.
The old people, Secretary Paulson, who apparently was here not too long ago, the implication these days is, hey, look, the bailout worked. We're all still standing.
Well, there's some of that, right? I mean, to a certain extent, even though, what do you say? This is a problem, right? There's a little bit of, we do our special rituals every night to prevent the moon from falling to the earth. And look, the moon hasn't fallen to the earth. So how do you know? But look, after Lehman went down, after the failure of Lehman, there was a real there was a real fear. I mean, I was really afraid, and lots of people were really afraid that we're really going to see the whole financial system just freeze up, just completely. Actually, for a couple of weeks, it was frozen up. There was no money flowing, and you don't. And things are more normal now. Now they're not great. The banks are not lending out freely, and we're not getting a lot of it. We haven't actually managed to get the whole thing restarted, but we have avoided disaster. And you get into some of these more technical things. You know, the Federal Reserve is out there buying all kinds of funny stuff now, and some of the spreads in the markets that we worried about have come down. So there's now it's kind of hard to call something a success when we're still losing jobs at the rate of 500,000 a month. But the things, it's like the old joke, you know, cheer up, things could be worse, so I cheered up, and sure enough, things got worse. But things could be worse right now, and so I don't. We're not fully. If we're worried that this is going to be 1932 all over again, at least so far, you know, we have not had a third of the banks closed down. So that's a funny kind of success, but I guess it's sort of a success.
You know what's missing from this success, among other things, is we're about to have spent about $700 billion, and how much of this money has gone to more directly helping people facing foreclosure? I mean, we're into 09 here, and a big plan hasn't come forward.
That's right. No, that's exactly right, and we want something like, you know, we're all talking. Actually, I do believe I may have been the first person back in Conscience of a Liberal, my last book but one, to talk about a New Deal. And we can learn a lot. So yes, FDR had something called the Home Ownership Loan Corporation, the HOLC, which did a lot to help people restructure their mortgages and did help. Now, things are it's a more complicated financial system now, but yes, we can do that. And one of the things I think that apparently is going to be coming is there's going to be a change in the legal environment, which will allow, will make it possible for people to, in effect, do for home mortgages what's done for other debts in bankruptcy proceedings, and that in turn will lead to a lot of renegotiation. But yeah, I mean, this has been. It wasn't up to this point. It's been astonishingly a Wall Street-centered thing. It's been the whole thing has been, we keep the financial institutions going, but we don't really sort of care about the homeowners or the people. And that needs to be changed, but not by saying that we don't care what happens to Wall Street, because unfortunately, much as we may dislike the financial industry, we kind of need it. But yeah, you need to do a lot more, and I think we can. And you know, we hope also, by the way, that $700 billion, some of that won't come back. And I guess we'll find out. We'll find out just how badly it's been managed. But it's not $700 billion lost. It's a substantially smaller sum than that.
In theory, those banks have to pay back the stuff at 5% or something like that.
Well, or a lot of it is, or there's ownership claims or something, So, the people have done. The thing, by the way, the thing that really amazed me when there was all this thrashing around, when Henry Paulson was the mysterious, the 3 pages, the original 3-page proposal, I don't know if people know it, but the original proposal sent to Congress basically said, we want a blank check. We want the ability to, you give us $700 billion and we'll do whatever we feel like with it. And furthermore, we're immune from any future accountability. And they actually expected Congress to pass it in that form. What was so strange about that is that although the scale of this is like nothing that we've seen since the 1930s, things like this have happened. The Japanese had a banking crisis. The Swedes had a banking crisis. And there are standard procedures. You put money in, but you take ownership stake in return. You get something, you get a claim. And so the Swedes at least claim that they did their big bank rescue and in the end made money on the deal. Now, it's not clear that's really true even in their case, and it's definitely not going to happen this time. But it is not, at least if you do it right, it's not money lost.
Help us understand, though. I mean, the Japanese did spend a whole lot of money during their lost decade, fiscal stimulus, and it was a lost decade.
Right.
So people say, well, therefore, this doesn't work. Well,
yeah. Let's talk about FDR first, because it's the same thing, actually. So FDR did Works Progress Administration, created directly at its peak. About 5 million people were working on WPA projects. And when they were doing it, it actually did push the economy up. So the unemployment rate came down for the first 4 years under FDR. Brought it down steadily, but it was never enough. Remember, starting from 25% unemployment there, so it was never big enough. And then by 1937, things were starting to get not good, but not quite so terrible. If you measure the unemployment rate the way we would now, it was about 9%. And FDR was persuaded, okay, now the economy is doing fine, we can throw away our crutches, cut the WPA in half, raise taxes on working class families, and the economy slid right back down into the Depression. And it was only a very large public works program known as World War II that finally ended the Great Depression. The Japanese story is like a minor league version of the same thing. When they were doing this stuff, although they were pouring an awful lot of concrete and doing this stuff, but it was never quite enough to match the scale of the trouble they were in. They would get a recovery, and then just when things were really getting going, their fiscal conservatives would say, oh, well, we got to raise value-added taxes, basically sales taxes on ordinary people, and we got to cut back on the spending, and then the economy would slide down again, and then they would start it up again, and so it was this kind of stop-go thing where they never really did it with enough vigor. But if you look at it year by year, you discover that the years when they were doing more of the stuff were the years when their economy did better, and the years when they were doing less of it were the years when they did worse.
Now, I know if I really took the high road, we would let bygones be bygones, look to the future. We're in a mess. Let's work on solutions and not point fingers. That said,
yes, let's point.
Let's blame some people here. Now, conservative blogs have been blaming poor people. If they hadn't been taking out these dumb subprime mortgages, this never would have happened to capitalism.
Yeah, and they blame the Community Reinvestment Act, which required some banks to be a little bit more, do a little bit less redlining and so on. Okay, so Community Reinvestment Act was passed in 1977. And so, as a natural consequence, that meant we had a housing bubble in 2005, right? I always love these lags, right?
Quoterat demonstratum.
I remember in the late 90s, conservatives were saying that the booming economy under Bill Clinton was the result of Ronald Reagan's 1981 tax cut, which then said that Morning in America. By the same time lag, Morning in America was the result of something Lyndon Johnson had done. But anyway, okay, so what do we know? We know, first of all, that this particular thing, Community Reinvestment Act, only applied to depository institutions, only applied to banks proper, big marble buildings with FDIC signs in the window, and those were not the big lenders in subprime. So it was actually unregulated lenders not subject to this at all. Plus, it's not poor people who dominate the problem. Yes, a lot of subprime went to poor people, but if you look at where the loans have gone bad, it's all income classes. It's all up and down. A lot of the stuff, there's a real danger of getting too wonky here, but Alt-A's, which are often people who are self-employed, are as big a problem as subprime, and then often include people with fairly high incomes, or at least people who claim to have fairly high incomes. Love the story about the guy whose supposed source of income was as a mariachi singer, and as evidence of income, they had a photo of him in his costume. But anyway, but look, there was wildly irresponsible borrowing by lots and lots of people, and it's not just. There's very little correlation between income. It's not, if you think that the problem, this whole big mess, is caused by those people taking out loans to buy houses they couldn't afford, it's just not right by the numbers. The really big stuff is all up and down the board, and although there may have been disproportionately more lower income people doing this, by that same token, they weren't taking out loans that were that big. So no, this is a tremendous attempt to blame it And besides which, of course, who was pushing these loans? I mean, there were numerous attempts by state-level regulators to say, let's have some rules so that people aren't misled into taking loans. Less sophisticated borrowers don't make these kinds of mistakes, and they were, of course, overruled from Washington.
Well, Alan Greenspan also
Yes.
didn't step up to slam on the brakes at any point here.
Oh, Greenspan, I mean, there's no single villain. There's no Dr. Evil here. But if there's one individual who would take the biggest guilt, it would be Greenspan, because Greenspan had the authority to at least somewhat rein in this irresponsible lending. He had a platform where he could say, "I'm worried about what's happening." Instead, he insisted that everything was fine, that there was no housing bubble. We have favorite quotes, from him saying it's most unlikely that there could be any severe price distortion in housing. This is at the point when the bubble was just, stared out at you from the numbers. Just at every point, he blocked efforts. He was specifically warned about subprime, refused to do anything. It's just a long list. If there's a single person who had the possibility of doing something about it and in fact acted to make it worse, it would have been Greenspan.
What about people who were very sophisticated in the world of finance, people with MBAs and so forth, who were playing with things that have turned out to be, at some level, weapons of financial mass destruction? Some of these very complex instruments that too many people didn't understand.
Well, first of all, I think we need to maybe rethink our notion of how smart seemingly sophisticated people are. And I guess, I can sum that up in 2 words, Bernie Madoff. The other thing, you want to think about the financial incentives that face people in the financial industry. Suppose that you are suppose that you're the manager of some kind of financial institution. Suppose that you're a hedge fund manager, or I don't want to particularly single out hedge funds, but similar schemes operate in many places. You get paid typically with some fee that's based on the amount of assets under management plus some bonus for profits earned. But the profits are measured year by year, and so profits that are in fact totally illusory, because what you've done is expose people to a lot of risks that they don't understand, because you've leveraged yourself up, you've borrowed money, you've moved into things that yield a high rate of return, but that's because they have a high probability of blowing up. You do very, very well until one day things blow up. And guess what? You don't give back the money you were making in the meantime. The whole structure of the incentives, the way people are paid on Wall Street, or were paid when people were being paid on Wall Street, the whole structure pushes people into, in rational self-interest, into doing crazy things with their clients' money.
So that's what has to change, the incentive structure?
Yeah, now I don't know how you make that a policy change. I don't know quite how you dictate that from Washington, but yeah, the incentive structure, and this has been known for quite a while. So I used to teach at MIT, and one of my former colleagues, Andy Lowe, back in 2001 had a paper in which he just had a hypothetical hedge fund that with this typical compensation scheme for the managers, which he called capital decimation partners, and he showed how this hedge fund, you could structure it in such a way that it was doing nothing productive. All it was doing was creating a lot of risk, but it was almost guaranteed to make the managers extremely wealthy before it blew up, and that's the point, that this whole structure. I mean, there are hundreds or thousands of people who have walked away very wealthy from creating all this financial destruction, and it's a I wrote for the Times once. It was a Madoff economy. Most people doing this were not in a legal sense engaged in fraud, and they may even have managed to convince themselves that they were doing something productive. But the fact of the matter is, it was basically a Ponzi scheme.
And when we talk about trying to find ways to change incentives so we don't encourage this kind of behavior, we might change some incentives at the Securities and Exchange Commission, where they really fell down on this completely.
Well, and this is where, when we try to ask, how did we get here? I think it's a story. There are many streams flowing into this river of disaster. Or what? There's some metaphor here that I'm reaching for that I'm not getting. But but there were many ways in which this happened. But we had this overarching ideology, which was the market works, the market is right, regulation is just a mistake. Basically, all those things you heard from the 1930s about why you need to regulate financial institutions and why you need to regulate markets and you need to oversee, that's all a myth. It's all destructive. And so we had, crucially, during these years when the worst excesses were taking place, we had an SEC that was run by people who basically didn't believe there should be an SEC. We had look, it's not just the SEC, right? There was in 2003, all the representatives of all the different federal agencies that regulate banks came together for a photo op where they had stacks of paper representing regulations. And they had tree shears to cut up the stacks of regulations, except for one guy from the Office of Thrift Supervision who actually had a chainsaw to cutting up the stacks of regulation. This was to demonstrate their commitment to deregulation. And so are you surprised in that environment that it turns out that the SEC was asleep at the switch?
Plus, pretty cool career path is work at the SEC for a while, then get a big, high-paying job on Wall Street.
That's right.
You don't want to get too draconian in your regulation during your
right.
SEC part of your career.
Yeah, it's one of these things. One of the questions that a lot of people ask is how much did the fact that we were living in the second Gilded Age with this enormous inequalities of wealth and income, how much did that cause the crisis? And I'm sure it did in various channels, but one of the channels was that the amount of money you could get paid in the financial industry was so huge that if you were a government official, all you could think about really was that revolving door. And it used to be a time when being a highly placed civil servant was a reasonably well-paying job. Not as much as you would make in the private sector, but not 1 or 2% of what you would make in the private sector. And so this becomes the incentive structure there again is all distorted. People. You don't want to make too many people mad while you're a government regulator because you're thinking about what you're going to do next.
This lovely sold-out crowd demands some big questions. So I got a big question for you. When you said ideology in the SEC, it reminded me of this. Last fall, there were many European voices criticizing American-style capitalism. The Archbishop of Canterbury, of all people, the leader of the Church of England, Rowan Williams, wrote that too much trust in the righteousness of the market was a kind of idolatry, he said. And the Germans started in on Anglo-American capitalism. Is it Anglo-American capitalism that is producing this kind of destructive ideology, or is it capitalism that really is got a problem here?
Oh, boy.
Said it was a big question.
Yeah. I'm a meliorist, not a revolutionary, right? The world has tried doing away with capitalism altogether, and that didn't work out so well. We've also tried completely unregulated capitalism, and that didn't work out so well. So what actually seems to work, on the financial side, we came out of the 1930s with a system that was pretty heavily regulated, but not nationalized, but pieces of it, there was, Fannie Mae existed, but it was a government agency. It only got privatized in the 60s. Where we had banks, which were still banks, but they had capital requirements, deposit requirements, insurance, regulations on what they could do. And that system worked pretty well for half a century. Now, there were some problems, as there always are, but mostly there was a change in belief where people started to say that, well, why do we need all these regulations? And now we found out again. But it's not that capitalism per se is, I suppose, you can say, as long as you've got private property, people are going to look for ways to do more with it and agitate. But we had on the financial side, we had a pretty well working system of managed private markets. Nothing that says that you can't have that you have to have the government own the banks. That turns out to be not a terribly good idea. But it's not that extreme. There is a middle ground. All that happened was that we had a vast case of amnesia. We forgot the reasons why we regulated these things in the first place, and that's the issue. It's not. And by the way, I will say the Europeans, although they do there are a lot of things they really do better than we do. Healthcare. They, on financial matters, they actually have their own problems too. So, if you want to look at the world, we screwed up pretty badly, but Europe has got its own financial crisis, which is not that much better than ours.
So we're stuck by events revisiting the New Deal, a New Deal, but in the conscience of a liberal, you're trying to draw on something much wider than a government stimulus package on a grand scale. Share with us a bit more about the ethic that we should learn from the 1930s in trying to make this country and world a better place.
Yeah, that's a small question as opposed to the big question. Yeah. So look, So what happened in the 30s in the United States was, of course, actually talking about capitalism, FDR saved capitalism and democracy, but saved capitalism, and of course the capitalists have never forgiven him for it. What we learned in the 30s was that a fairer society, a more secure society, can also be a better and a more productive society. What we did in the 1930s, what our grandfathers did, was make our society more equal, not totally equal, didn't try to turn into Cuba, but made it more equal by having a strong labor movement, by having unemployment insurance, by having Social Security to guarantee people's retirement income. And it turned out that also made us a more productive society. It turns out that after World War II, in this more equal society that emerged from the Great Depression, had the best generation of economic growth that we've ever had in this country. Then we ran into a rough patch, but mostly we had political changes, and we undermined a lot of that. And we need to return to that. We need to return to the sense that, to the understanding that doing what's right can also be what's effective, at least up to a point. That doing good also does well for the economy, and there are things we can do right off. We can try to reduce inequality in a variety of ways, and we can fill the great gaping hole in the New Deal, which is healthcare, and get what every civilized country has, which is some guarantee of universal healthcare for everyone.
Not to be Debbie Downer on that point, but I was sitting across from another liberal economist, Kuttner, in an interview, and he said something quite controversial. He said he too is desperate for reform of health care, but he said not now. We got to address job one is the economy, later on health care. Are you of that same mind?
There's an economic question and a political question. Should we be, should priority one be to get universal health care up and running this year? I think no, because the priority one is to avoid Great Depression 2. But I don't think there's any reason to delay on the legislation. We know it's going to take some time to get the system up and running, and furthermore, the system will get this, even if we succeed, is going to require a lot of changes over time. But get healthcare up and running, and I don't see any reason why that shouldn't happen now. If you say we can't afford it, well, actually, it's not going to start right away, regardless. And we're not. Give me an economic point here for a moment. We are not actually poorer than we were last year as a society. right? We look at this and we say, well, the economy is shrinking. Shouldn't the government have to tighten its belt? Shouldn't we all have to tighten our belts? But the resources are still there. The workers are still there. We haven't gotten stupider, right? What we have is a malfunction in the financial system, which is leading to this contraction of the economy. But the government is still able to borrow. The government is still able to act. So why not? This is actually a good time to be moving forward. In fact, one of the things that we could hope will be helping to support the economy a year or two from now would be that we're getting the universal healthcare system up and running and starting to provide people, typically people who are in dire straits right now, with the guarantee that they can afford healthcare, which will free them up to spend money on other things. So I understand. I mean, if the financial system and the economy hadn't gone off the deep end this past year, then all of the focus, I think of Katner and myself, and a lot of people would say, okay, what we really, really need to do right now is healthcare. Now, obviously, rescuing the economy has moved up to the front of the stage, but I don't think there's any good argument that says we have to delay moving on healthcare either. That is still, and look, FDR did go back to the New Deal. FDR did got a B- in terms of actually fighting the Depression. Okay, it was a lot better than what we could have had otherwise. And all of the stuff you've heard about how he made it worse, which has become the latest conservative talking point, is just dead wrong. But he didn't do the greatest of jobs in fighting the Depression for a variety of reasons. But he created Social Security, he created unemployment insurance, he created the minimum wage, and that was the lasting legacy. And I will consider the Obama administration to have been a failure, even if it gets us through the economic crisis, if we don't come out the other end with universal health care.
Time to make this session interactive. I'll be channeling some of your questions that you've written down here. And as you mentioned earlier, this event is being watched via satellite in a bunch of locations around the country. And some of the wonderful folks out there have also submitted some questions that we'll try to get to. Says here, Paul, that Obama mentioned you the other day and said he would be open to your suggestions. Have you spoken to the man?
No. I actually have during the campaign briefly, but no. Communications, however, are taking place. But
can you give him a subscription to the New York Times or something?
Something like that, yeah. And I mean, you know, he knows what, or his team knows what I'm saying, and you know, I don't envy them the job. They do face, you know, they're having to fight off political pressures from various directions. But one theory of what's happening is that they're actually relying on people on the progressive side of things to put on pressure to keep them, you know, to make the stimulus bigger and better targeted, because they need pressure from the left. And whether that's true or not, I will continue to apply it.
Another question from the House. How much has the spending on the war in Iraq contributed to the mess that we're in, the downturn specifically?
Okay, I'm going to disappoint some people by saying I don't think it's a factor. You know, economics is not a morality play. It's not, bad things don't necessarily have bad economic effects, at least in the short run. The Iraq spending, yeah, it's, you know, and the war itself. Let me just say, well, the most disheartening thing about the way things are unfolding is it's starting to look like there is not going to be any attempt to really hold the people responsible for that war accountable. I want a Truth and Reconciliation Commission. I think. The war, all of these things, war, the torture as American policy, my God, this has done enormous damage to the nation's soul. But I don't think that you can make any very coherent case that despite, you know, whatever we've now spent, around $800 billion, I think, on the war, that is a big factor in what's going on here. It's just, you look at where the financial collapse has come, and I just don't think you can tell the story that the war was at the heart of it. It was an ugly, terrible thing, something that we'll have to live with for generations, but it's not part of the financial mess.
Here's a question. What are the signs that you are looking for to be able to say that the economy is starting to turn around?
Well, it's the obvious. Looking at, I won't believe that we're having a turnaround until we start seeing employment rising at a fairly substantial pace. And all the other indicators, yeah, you can look at what I don't really care about the financial indicators. We had a bit of a stock market rally last few weeks. I don't think that's an important indicator because that doesn't matter. It obviously matters to people's portfolios, but it's not crucial. I don't even care very much about these credit market indicators, except insofar as they give you some clue about what's going to happen. In the end, what matters is jobs. Really, almost the only thing that matters is jobs. Now, you hope for things that might give you some clue about where jobs are going, but I'm not going to believe in in the hope for recovery until we see a lot of job growth. And remember that we've lost more than 2.5 million jobs over the past year. We need to create probably 1.5 million jobs just to keep up with the growth of the working age population each year. So we're about 4 million jobs in the hole right now. And it's going to get much worse over the course of the next year. So until we start seeing millions of jobs created, we are not on the road to recovery.
A bunch of the questions, as I look through them, fall into this category, and I think it's understandable. This one, though, from Longboat Key, Florida, where folks are watching us. Since even though you admit that there are no certain answers regarding the size of the stimulus, what financial advice would you give your mother in these conditions?
My mother's case, stay where you are, which is all in cash. One of the tragedies with the advice that financial planners always give is actually, if you are my mother's age, you should be all in cash anyway. That you should not be exposing yourself to risks at that point unless you have a lot of money. Safety is key now. I have some views about some things I think are undervalued, but I don't have a lot of certainty in that, and no one does. And stocks are, you can make an argument whichever way you like on the only thing that's safety becomes a really important thing. That's one of the things we forgot. We went through a very long period when you must have encountered this constantly, risk-taking. Talking about, we need to encourage risk-taking, as if risk-taking was always a good thing. And, it is not.
I had a mortgage broker sit next to me at a lunch who said to me, a 30-year fixed mortgage is the dumbest thing a man could ever do. That was a quote from him.
Right. Right. It's, no, this whole line of what the American thing is to take risks. Well, actually, no. And particularly if you're a retirement age, this is what you're going to have to live on. So you should not be taking risks. And of course, my advice to my mother is also, I'll take care of you if necessary. But anyway, that's a.
It's obviously true that a person who needs the money soon shouldn't have it in stocks. And you saw a lot of Sturm und Drang when folks who had money in the stock market needed to take it out to pay tuition for their kids.
Right.
And that was probably an unwise financial strategy. However, there are a lot of people in this country, we're looking into this to find out some numbers, they are of a certain age, and their plan was to sell their house when it came time to move on to maybe an assisted living facility. And they'd use the money from the house sale, and they're stuck in the house because housing values are down and none of these houses are selling.
Yeah, you can see it. I mean, in this case, I don't actually have to I can take off my economist hat and just say, look, I know about the retirement community in which my parents are living, where things are not selling because people who are planning to move into the retirement community can't sell the houses they were planning to move out of. We built this system, this conveyor belt, that was all based on the assumption that house prices only go up. And there is no good answer to this, obviously. There's only so much that Washington can do if we can unfreeze things. But the thing I should say about housing is that if you use conventional ways of assessing whether houses in general are priced right, which are the things, of course, that people like myself during the 3-4 years ago were doing these measures, looking at the ratio of prices to rents or prices to median income and saying, this is crazy, we're in a crazy bubble. They're all telling you just don't understand, things are different now. Well, now that the bubble has burst, even now, home prices are not back down to normal levels. They're not now 50% or 80% above where they ought to be, but they're still, by these measures, 10, 15% above where they ought to be. So this is not going to get resolved anytime soon. We are not, if people are expecting house prices to go back up to where they were in 2005, ain't going to happen.
And you know what's also horrible, Paul, is that they might not just suddenly stop at their just value.
That's right.
They could overshoot on the other side.
Yeah, there's a real possibility. Among other things, an awful lot of housing was built and during the bubble years with questionable demand. Again, I live in central New Jersey, and all the cornfields were sprouting McMansions there for a while, and there must be an enormous overhang of those things now.
Here's a question about financial services regulation. We touched on this about 8 minutes ago, and you quickly said you're not quite sure that there would be ways to change the incentive structure that has been rewarding very bad behavior. But some people who are watching this in Vail, Colorado, wondered, what do you think should be done with financial services regulation, the current structure, to restore confidence?
Well, the biggest thing, which is, I think, overwhelmingly clear right now, and we should act while it's still overwhelmingly clear before people start to forget what happened, is that anything that does what a bank does, which is basically to promise people money that they have quick access to, but to lend it out longer term, needs to be regulated the way we regulate traditional banks. And actually not the way we do, but the way we used to regulate traditional banks, back before the crazies took over. So we need to, anyone who's doing effectively the business of banking. So look, the story of how we got into this mess, the biggest part of it is that we developed a whole set of institutions that were banks as far as the economics goes. Whether it was money market funds, hedge funds in many cases, auction rate securities, asset-backed commercial paper, all of these things. Sorry, the jargon and the alphabet soup can grow, but there's a whole bunch of things that were, for all practical purposes, banks. At least in economic terms, were banks, but they were not regulated like banks. No reserve requirements, no capital requirements, no oversight, no regulation of the kinds of things they could invest in. And the reason we know that they were really banks is that when push comes to shove, they have to be rescued like banks, right? If it turns out that Lehman Brothers or AIG, by failing, can bring the whole financial system down, that's an institution you should have been regulating up the wazoo beforehand. And that means that we basically have to have a lot more regulation of anything that looks remotely like it's doing banking business, because the dangers are too great, and in a crisis, taxpayers end up being on the hook anyway. So this is the biggest lesson. Now, will that totally control problems? No. I mean, even in the 1950s, there was still financial fraud. Bad stuff will happen, but not on this scale.
Who's going to do the regulation? Do we need some new super regulator to get at banks and bank-like entities?
Probably. And I've never been very good at figuring out how you should draw the boxes on the organization chart. I mean, it matters. I don't want to act like I'm, brushing it off as a minor detail. It can matter a lot. But you probably do need some consolidation. We do have this kind of structure. Actually, we have a structure in which financial institutions can, to a certain extent, shop around, figure out which regulator they want to be under, so as to whoever they think is going to give them the best deal. And you certainly don't want that. But look, the biggest problem has not actually been the organization chart. The biggest problem has been the fact that the people in charge of regulating didn't believe in regulation. And so the biggest change we need is, although we do need reorganization, what we really need is people who actually believe in doing the job in charge. It's ultimately, it's a political, it's an ideological shift. And if we do that, then then the organizational details can be fixed.
Many people see the need for fundamental change in the regulatory structure, and there's all this talk about doing something. But you know, some things haven't changed, and one of those things is money and politics.
Yeah.
And people who have a stake in the old system contributing to politicians. And do you worry that we could be, you and I could be talking here this time next year, and not much was really done because of that?
Yeah, I worry a lot about that. I worry that in some ways, if the economy starts to recover, it might even be worse. You know, the book, one of the books, the latest book, which is Return of Depression Economics, updated. The original version was written in 1998, at a time when I was very scared, and we should have seen the possibility of what's happening now 10 years ago. I'd like to claim that I did totally see it, but I didn't totally see it, but parts of it were clear. So we'd already seen it 10 years ago last fall, long-term capital management, an unregulated hedge fund, nearly brought the world to an end, right? Its collapse produced a crisis that was very similar to what happened after Lehman. Why didn't we have massive financial reform in the wake of that experience? Well, because Treasury and the Fed managed somehow, they're not, to this day, they're not quite sure how, they managed to restore confidence, and the markets went back to normal after a few weeks. And everybody said, oh, so we can deal with these things, problem solved, and nothing was done. If we had acted then, we might not be in the mess we're in now. One of the nightmare scenarios here is that, okay, the economy is limping forward, it's actually starting to recover by late this year. Financial markets have calmed down a bit, and everybody says, well, okay, it really wasn't that big a deal. After all, who needs all this extra regulation? And it'll be fine, because we coped with it. And then, of course, the next crisis, when it comes 4 years later, is even bigger. So, no, this is the time to... So looking back is not actually irrelevant, because we had better figure out how we could get into this situation. It's not just a question of how we resolve the current crisis, although that is a job and a half all by itself. It's how do we prevent, how do we avoid, because this was, this crisis, we've had crises before that were nasty, but they had some external event. There was a war in the Middle East, disrupted the oil supply. Something like that occurred, and you could say there was a real reason. This came out of a clear blue sky. There was nothing happening here except our own mistakes. We created a system that turned around and bit us. And if we don't reform that system, it's going to do so again and again until finally we get into something that is far worse than anything we can now imagine.
And on the subject of regulation, something that's especially confounding, hate to bring it up, is that it's not just America's issue. In other words, capital can shop for regulators, not just for regulators within the United States, but they could go abroad.
That's right. And so it has to be globally coordinated. We have to have an international agreement. Now, we do that for conventional banks. We actually have something called Basel II, which is an agreement setting standards for capital, but only for conventional depository institutions. And it's imperfect. It's not great, but it's better than nothing. And this one, sure, terrible problem. If we start to do proper regulation in the United States, and let's say in Britain and in Germany, but it's still possible for somebody to open up a hedge fund or some kind of institution in, well, pick a random place like, say, Iceland. Then you're still exposed to the very same risks. And this is actually one funny thing. If you believe the numbers, the international movement of capital has slowed to a crawl since the fall of Lehman. Both inflows of money into the United States and outflows of money from the United States have both dried up. The question is, what's that about? And the answer probably is that most of it wasn't real movement of money. Most of it was people doing things, doing funny stuff through offshore entities. So what looks like capital outflow and capital inflow is actually somebody doing hanky-panky in the U.S. markets via their subsidiary in the Bahamas or in London or in Luxembourg or in Dubai. And that stuff, because nobody has cash right now, everybody's in trouble, that stuff has all shut down for the time being. But that's telling you how critical it is. Yes, you have to worry about these rogue financial centers. It's going to be it really does have to be coordinated. We really do, people who've wanted some kind of global governance, well, it now becomes not, just a good idea, but it becomes a necessity.
But surely people in the Middle East and China are buying our debt, right?
Define people. No,
sovereign wealth
No,
funds.
it's actually it's essentially governments, and the Chinese are buying a lot of our debt still, and the Middle Eastern countries were. I'm not sure if they have any money now.
We have a question here from Miami about this. Do you think China will continue to buy this debt?
I think they will slacken off after a while. I think the implication there is presumably, are we going to be in big trouble if they stop? I think the answer to that is not as big as you might expect, because where most of the money for the enormous spending bailouts we're going to have to do, although we've been borrowing a lot from China, most of it is actually coming from domestic sources, because the money that American businesses refuse to invest right now, what's it doing? It's piling up in Treasury bills. So in a sense, our own incipient depression is financing the stimulus package. But yeah, it has been very strange, and I think in the end, this is what I said, best line I ever wrote for the Times, which was back in 2005. I said that America has become a country where we make a living by selling each other houses, which we pay for with money we borrow from the Chinese. And I didn't think that was a very stable situation, and it wasn't.
Someone's got a bone to pick with you. Why bother going after Obama's pick for Surgeon General?
Oh, gosh.
It was the guy on CNN that is the pick for Surgeon General,
Yeah,
Sanjay Gupta.
Yeah, I haven't wasted a column, which is a scarce resource, on it, right? Sorry, I put a blog post. No, I was unhappy. Sanjay Gupta of CNN, I had known nothing about him except that he did a disgraceful attack on Michael Moore's movie Sicko, which is not to say that Sicko was necessarily your favorite movie or that Michael Moore is your favorite person, but Gupta went after it claiming, he said, Moore fudges his facts, which is a hell of a claim to make. If you want to say that, that's TVEs for saying you're lying. And it turned out on every one of the alleged fudged facts, Moore was right. They'd actually just invented errors in the film that didn't exist, which was not good behavior. What Michael Moore was trying to do was trying to get us universal health care, and maybe you don't like his methods, but he was in fact careful about the facts. And what bothered me most about it was that what Sanjay Gupta did was very much establishment behavior. It's okay to go out and sneer and jeer at somebody who isn't an insider. And, after all the things that the insiders have done to us on foreign policy, on financial policy, that's not an attitude I really want to see. Now, this is not... Okay.
To Paul Krugman. Why is it so difficult to demand accountability for government spending, specifically the money spent on Iraq reconstruction project? There's a scandal.
Yeah. And it's difficult because the people in charge have not wanted accountability because it was their friends. Coming back to why we really do need a Truth and Reconciliation Commission. I mean, when the news came out very early in the Iraq occupation that enormous contracts were being given on a no-bid basis to Halliburton, some people actually in the news media, their immediate reaction was, "I can't believe this. This is vile. This is incredible." And then somehow the word went out that it was not proper to make a fuss about that. And there's never been, I mean, auditors in the federal government who tried to raise, sort of ordinary questions were sidelined, their careers brought to a halt, and none of this was talked about. I don't think things like that are going to happen under the next administration, but unless there is some accountability for it, it will happen a little while down the pike. These same people will be back. So I continue to be mystified, in spite of everything, at the fact that even now we're not really going after accountability for all these things that happened. If you go back, in 1993, the fact that Bill Clinton fired the people running the White House travel office, big important thing, right? It's a major story. It was run front page news for weeks and weeks. Everybody went on and on about it. It turned out actually that there were some questions about the people. And billions of dollars unaccounted for in Iraq, a lot of it given to companies with personal connections with people in the administration, and has never been a major issue. Go figure.
Now, moving forward, when we talk about accountability and not wanting to waste government money, we're proposing to spend a whole lot of money on the stimulus. Aren't you worried that a lot of it could get misappropriated? And the potential for corruption has to be fairly great.
Yeah. New Deal was very good at this. It's actually a remarkable story how they handled the WPA. They created a system of investigation which was independent. They created really very, very strong independent auditing of operations, clearinghouse for complaints, and they did very well. The WPA, which was the epitome of discretionary spending, of government going out there and deciding which projects to do, was remarkably clean. There was remarkably little in the way of well, there was a congressional investigation in 1940 to look for possible fraud and misallocation in the WPA, and there were a lot of Republicans in the group, and they actually could not find any significant cases that the WPA's own auditors had not investigated. So it can be done.
Well, what accounts for that back then?
Well, they thought about this, and they said, an important part, there is an ideological thing that matters quite a lot. If you are an administration that fundamentally does not believe in government, your ideology is that government can't work, then if you mishandle your responsibilities running the government, you can just say, see, that proves our point. And that was very literally true. And in the days after Katrina, there were quite a few people saying, see, we told you government doesn't work, because clearly FEMA failed. The fact that FEMA had been a much admired agency under Clinton was forgotten, and instead it was, well, gee, this just proves our ideology. But if you are a government that believes in the importance of government working, and believes in the role of government, then you have a point to prove. The incentives, back to not financial incentives now, but political incentives, the incentives are very strong to make it work. So I'm hoping that the people who will be administering our stimulus plan will understand that it's really important to have these controls, because they need this thing to work. They need to not offer political targets. That said, boy.
That's quite a bit of static. Sorry about that.
Yeah,
folks.
Sorry. That said, there is a point in saying that we need support for the economy out there, and we need it fast. My economic idol in all these things is John Maynard Keynes, the man who figured out the Great Depression. And at one point in his great book about Depression economics, he said, there is a problem that if you do anything that's actually a useful project, or potentially a useful project that then people will be demanding that you prove that you were actually doing it in the best possible way and you're doing exactly the right projects. And he said, maybe we should fill up disused coal mines with bottles full of cash, cover it over, and then let the private sector dig it up again, because that way there will be no suspicion that it might possibly be useful, and then they'll let us spend the money freely. Okay, now that's not what we're going to do now, but it is. I think it's very important that there not be corruption, that the rail link that we build, that if we, I'll take what I want from the stimulus proposal, and this is corruption because I'm plugging what I want. I want that second rail tunnel under the Hudson.
Spoken like a man who works in Princeton and comes into the cities from time to time.
It's terrifically important that that second rail tunnel be built without corruption. It's terrifically important that that Tony Soprano not be controlling the contractors, right? It's less important that we do a really careful cost-benefit analysis of whether that second tunnel is worth building. We should try that, but if you're going to wait 3 years before these infrastructure projects, before these public investment, because you're being very, very careful to be absolutely certain that each one of them is justified, then we're going to fail to get the stimulus in time. So there's a certain kind of relaxation, but nothing, corruption will just be deadly politically if it's allowed to happen, so it has to be avoided.
Now, you once made the point with me that one of the successes of the 1930s approach here was that back then, government service attracted some of the best people, that it was an honorable thing to do. Your in-laws did not despise you for getting a job working for the government, and those folks were quite adept at managing these things.
Yeah, there was it's interesting that even before the New Deal came, before the Depression hit, it was not the case that government service was a despised occupation, even so. Even though it was a conservative administration, there was nothing like the trash talking of government service that we've had for the last 25 years in this country. And the New Deal itself was able to attract really very good people to run things. There has been a problem. Government pays very little, certainly for highly talented people. It's not well regarded. And we've actually, one of the things that is going to be very difficult for Obama is that the whole federal system has been politicized and demeaned for 8 years. So you're going to have a lot of the basic competence of the government agencies has been undermined. This is going to have to be changed quite quickly. I don't know how.
It just adds to the tension in the room. This is a narrative device to keep you on the edge of your seats. Excuse me.
When we were doing the dress rehearsal for the certain ceremony in Stockholm I was at recently, as we were preparing, and just as I was standing up to mime doing my thing, a flash bulb exploded, and I actually ducked.
Did you duck?
I ducked.
Hazards of economists.
Anyway, you worry. I noticed, actually, specific contrast. I noticed that, as many people probably know, in order to try to administer these TARP, the bailout funds, the Treasury Department was scrambling to hire people from Wall Street to do it because they said, we don't have anybody to do that. The British are doing a similar program, and Her Majesty's Treasury, as far as I know, was not scrambling to hire people from the City of London to do it, because the British Treasury has not been degraded in its staff quality over the past 8 years the way the U.S. Treasury has.
I've got a follow-up question, then the final question, quick final question.
Yeah.
And then we're actually going to do, not we, you are going to favor us with some autographs on some books for people who are interested in an adjacent area.
You can sign them too if you like. No, sorry.
Not with my long Italian last name. It would take too long. All right, follow-up question is this. We talked about let's work to be sure that we don't have a lot of corruption in the stimulus approach, but you also said don't let that stop us from moving forward, because that is job number one. But there's got to be better uses for the money than others. Shouldn't we think creatively and deeply about how the money might not just dig us out of, prevent a depression, but also we're building a country for our children with some of this money. Are there ways that we can look for innovative uses for some of the stimulus money?
Yeah, and that's hard to do because it's hard. It's hard to, yes. Am I doing that, or is there just, I don't know. It's hard to prescribe in any sort of abstract way. So if I try and sit down and say, well, we should come up with a list of green projects, for example, environmentally friendly projects, I don't know enough to do that. This is one of these things that has to be put together with discussions with lots and lots of people. The thing I would say is that the size of the problem, the size of the short-term economic problem is so large that it actually puts a premium on creativity and coming up with ideas. The limitation on public investment right now, the limitation on the things that they can do on that side is not at this point, we've only got so much money for it, because they're actually having a problem spending enough money. The limitation is, in fact, coming up with good projects that can be done fairly quickly. In a sufficient volume. So if someone has an idea, now I've been pushing. I've actually specifically been saying we need to think a little bit longer term. A project that won't start until next year and will deliver its peak spending in 2011 is probably still worth doing, because all indications are that the economy is going to remain in need of help well into 2011. But coming up even with enough projects, conventional ones, to provide the kind of boost that we need, that we'll do it in that time frame, is limited. So we need the unconventional. It's actually one of those cases where it's not that there's a competition between repairing the bridges and the roads and all the usual stuff that you can think of and doing some things that are more imaginative. We're going to do all the road repairing and bridge repairing that people can think of, or at least I hope we are. And we're still really going to have to. We're going to want to spend several $100 billion more. And so there's plenty of room for creativity. I think we're going to have to think about creativity in ways that are not just, that are more creative. I mean, things, for example, I'm being told by people I trust that one of the greenest things we can do, one of the things we can do that's best for the environment, is something that most people would never think of, which is actually to work on improving our ability to ship freight by rail. Not personal travel, but freight travel by rail, which apparently saves lots and lots of energy, greatly reduces environmental damage, right?
And has some fans here.
Right, all right. The people, yeah, I'm
the chairman of CSX Corporation there in the back.
And personally, as a Amtrak user who has been stuck behind those trains,
yes.
I want more rail for them too. Not to have less of them, but more of them.
Okay, my last question has a quotation in it. You're the smartest guy that I know. The other really smart guy that I turn to for advice is actually my dad, who's not an economist, but he's a professor of American literature. And when I was puzzling over the economy one time, he sent me a gift. And it was an early, not an original, but an early edition of Extraordinary Popular Delusions and the Madness of Crowds, Charles Mackay, a Scottish poet and journalist, among other things. The preface to the 1852 edition has this paragraph. And listen to this, 1852, he was writing. Money has often been a cause of the delusion of multitudes. Sober nations have all at once become desperate gamblers and risked almost their existence upon the turn of a piece of paper. To trace the history of the most prominent of these delusions is what the book is all about. He goes on, men, it has been well said, think in herds. It will be seen that they go mad in herds, while they only recover their senses slowly and one by one. The quick question is, how slowly? How long is this going to be?
One way of looking at what's actually happening to our economy, to our financial markets, is actually that we're suffering from a mass attack of sanity. It's, you know, what we're seeing right now with people starting to actually save again, people saying, I really don't want to have so much of my wealth in highly risky assets. That's not a delusion. The delusion, the madness was the bubble, the belief that if you turned your money over to some persuasive guys wearing expensive suits, that was going to magically make you richer. So what's actually happening now is not that we're seeing a delusion. What we're actually seeing now is that people are starting to behave sensibly. The problem, and this is where macroeconomics comes in, what we know all too well, what we knew from the 30s, is that when everybody starts becoming sensible at the same time, that can actually be, in the short run, quite devastating for the economy. So there's something we talk about in economics called the paradox of thrift, which is that if everybody tries to save more at the same time, the result is, in fact, a depression, which can leave everybody worse off. Now, in the long run, this will work out, but my favorite quote is again from John Maynard Keynes, who talked about the long run and said, trouble is, in the long run, we are all dead. I just saw, actually, the Times had an editorial which also quoted Harry Hopkins, one of Roosevelt's people, saying that people don't eat in the long run, they eat every day, which is another way.
There you go.
So what we're looking for now, I don't think the problem is actually what will it take to get people to calm down and become rational. That's happening. That's happening quite fast. The problem is, how do we bridge the economy through this period? How do we've had our bubble burst, quite literally. Now we have to get through without this sudden attack of soberness causing a second Great Depression. I think we can do that. I think with a little bit less confidence that the people actually in charge will do that. But pretty scary times.
We did a drawing here tonight, if you had signed up, and they've pulled the name out of the hat, and the winner gets a Paul Krugman book, hopefully signed. Hope Gamble, you are the winner of the free Paul Krugman book. Congratulations. There'll be the autographing of the Paul Krugman books anon. And as a broadcaster, about the only thing I am good at is ending on time. They said 9:30, and in 3, 2, 1, 9:30. Right. Paul Krugman.
Thanks so much.